Hello, this is Jeremy Bream, and I'll be going over this week's presentation of the Starbucks stock analysis. First, we'll be going over the data section, how we collected and formatted the data. Data collection, we found most of the historical information for Starbucks at the NASDAQ.com site. Here I was able to pull 5 years of collective data pertaining to the stock itself, which included everything from the date, the prices of when it opened, how high it went for that day, how low it was at the end of the day, what it closed at, and the amount of volume for the stock. And we decided on going with Starbucks based on the fact that during last week's research, we found that Starbucks was actually a rather promising company. As we continue on, also pulled the S&P 500 data, which was gathered from investing.com. Here we were able to pull similar data, which was the date, price, when it was, how much it opened at, how much it went at the highest part of the day, what it was at the lowest part of the day, volume, which come to find out didn't really tell anything, as nothing was really annotated in the data, and the percentage of change. Formatted the data. Originally got the data from NASDAQ in a CSV format file. I left basically the data alone, as the metadata was pretty basic and easy to understand. I compiled the S&P data into the CSV file and standardized it so that all the dimensions matched up with the measures. And on the secondary page, on the next page, this is where I did my computational analysis, where I made my Bollinger Bands for the lower and upper bands, computed the mean. You don't see it on here, but the standard deviation was calculated, but was taken out as copy and pasting. I didn't copy over the formulas, whereas it's just the values for it, so it wasn't really needed afterwards. But here we see the formulas that were used, which coincide with the videos that were presented with the assignment. And here we see the performance. Over the 5-year period of the performance, you notice that Starbucks gradually increases over time. There's a couple points where it actually dips down, but those coincide with actual S&P 500 dips themselves. As you can see, approximately 824.15, there was a shift in S&P where it was also noticed at Starbucks stock performance. And here's a truncated timeline just for the calendar year 2015 and several months for 2016. As you can see, the Starbucks, which is the top trend, continues to slightly increase over time, giving a positive trend where the S&P is stable. And then at 824.15, you notice a shift in the S&P 500, which also correlates over to the Starbucks stock also falling. Over the subsequent months afterwards, the S&P maintains a slight positive trend, and also has a falling out during the January month of 2016, whereas the Starbucks stock initially positive trend and stabilizes, but then in the first part of February you see a negative shift. But as you can see, it's also beginning to trend back up. Patterns that we're seeing for whale tracks, there wasn't a lot of indicators saying that for the January 1st, 2016 through current date that there was any real whale track patterns. There was a minor one noticed with a ceiling of 58,500 and with a bottom of 56.5. You can see in the week of January 1st to the 6th that with slightly lower than the ceiling, the stock went up. Then the next subsequent week, it dipped back down into the gray, and then subsequently down to the very bottom. And then for the week of January 11th to the 16th, where it started off below the line, it jumped up the following week. Then it jumps back down in the gray, and for buying it, jump back out and then jump back in. So it follows a whale track pattern all the way through the end of January, but then you see the spike up in performance, and then it dips down in the first week of February. This dip is indicative of the S&P 500 shift during that time frame, whereas the Starbucks stock also followed. But in the second week of or third week of February, it's starting to regain traction back to where it was performing before. Support and resistance levels. There's a lot of fluctuation. For support levels, you'll notice close to the 4.7 million level. It stabilizes out at that point at the very bottom, where it tends to fluctuate at after every spike, except for the December and January time frame where it shows a lower than what the support level is indicated at. But then at the resistance level, you notice at the 16 million level, there are many spikes that go above it, but there are a lot of spikes that correlate to that time frame between September 1st through January 1st. And most of them that go above that sharply return. And Bollinger Bands, I came across a Tableau glitch where the averages were causing the lower and upper bands to swap over, and it just wasn't pretty, so I went to mapping my charts in Excel for this portion. As you can see, the mean, which is the blue line, is falling within the upper and lower bands accordingly. It doesn't have any sharp indicators of what the Bollinger Bands would bring as far as when to sell and when to buy. Moving to the 2-year trend, the average seems flatter. You don't see a lot of fluctuation here, but you do see the Bollinger Bands fluctuate more accordingly. Recommendations, because of the Bollinger Bands being that the is closer to the mid-range to the lower range, it'd be an opportune time to buy. Volume shift during the January 2016, it shifted up above or at or a little bit above the 10 million mark, and is doing a better in performance, which would suggest that stock prices are going to follow. Also on recommendations, for the short term, it would be recommended to hold on to the stock, and then within the next month or so, look at purchasing the stock, as it is still building up to increase, but it looks as to be a positive shift regardless. Predictions: 1 month predict to be stable performance. Over the quarter is going to be a positive trend. Barring any S&P downturns, Starbucks stock will maintain and increase within the next quarter, as it only seems to mimic the fallout from the S&P drops, not really so much when it increases or spikes, and Starbucks tends to stay positive and actually increase during the times when S&P 500 is stable. Some of the issues I came across with the Tableau and regression. This is a script I was using for doing my regression, but being that it's an R script, I would have to leverage an RServe or a R-based server in order to run the R script, and unable to get the regression data. Here are the references: the historical stock prices from NASDAQ. I also got my Tableau information from BI blog post, and also from the historical S&P 500 from investing.com. Thank you and good night.